Hey everyone, it's Benny the Finance Dog. Welcome to my channel. In today's video, we're going to continue our education on indicators and also talk about a trade, a swing trade actually, that I've taken this week and am currently in, and how the FOMC meeting went. So, starting with the indicator talk. Yesterday, we talked about the EMAs, and today we're going to talk about the MACD, which is the Moving Average Convergence Divergence Indicator. The MACD is a popular technical analysis indicator that can be used to identify trends and reversals in price movements. The MACD is calculated by taking the difference between two moving averages of a security's price. The most common moving averages used for the MACD are the 12 EMA and the 26 EMA. MACD is plotted on a chart with the 9 EMA plotted as a signal line. The MACD can be used to identify bullish and bearish trends. When the MACD crosses above the signal line, it indicates a bullish trend has started. When the MACD crosses below the signal line, it indicates a bearish trend has started. The MACD is a powerful tool that can be used to identify trends, reversals, and divergences. However, it's important to remember that the MACD is not a perfect indicator and should not be used as the sole basis for making trading decisions. Just like with all other indicators, it should be used in conjunction with price action, volume, intuition, and knowledge of the global macro events. I found personally that the MACD is a good, useful tool for new traders who are unsure about a reversal, as well as being used on higher time frames so that it could be more reliable. Now, let's talk about the FOMC meeting from today. Jerome Powell and the Fed did what was expected, which was pause rate hikes and did not give a ton of clues as to what was going to be happening in the rest of the meetings for the year. They did mention that 50 basis points was probably appropriate of a rate hike throughout the course of the rest of the year, but we still have a few meetings to get through before then. So it's still to say whether or not those raises will come in July's meeting or further down the line. Given this news and the lack of additional news, the market had a sell the news type move begun at 11, where you see just a giant drop off in Apple as well as across the board. Many stocks and securities just fell off the board. Once Powell started talking again, it did rebound, and there was a bit of volatility before closing just a touch lower at the end of the day. Basically, just a flat day overall. Me personally, I had swung some Apple calls, specifically the June 16th expiration 185 calls. I had an entry price of $103 per contract and am still in them, down 40%, which is terrible risk management. Though I am confident moving forward the rest of the week, the swing will be profitable given that we closed just under 184 and had a rally continue into the after hours trading. How did you trade today? Leave so in the comments and let me know if you were net green, if you were red, what you could have done better, and maybe what didn't go so well for you. Me personally, I went against my own advice and predicted instead of reacted to the news, and in so got caught in these swings that are currently red. I'll update you tomorrow on the status of that swing trade, and hopefully by then we are in the green. But if you're like me and in the red, just know that the market gives you an opportunity every single day, and you can grab it back. Thanks for watching. The highly volatile day was fairly exciting. Hope you had, some popcorn ready for those moves, and we still have half the week to make it a good week. So please come back tomorrow as we continue our discussion on indicators and we update you on the swing of those Apple calls. Thanks for watching. Make sure you like and subscribe for more content. Woof woof.